Emily Chang, and this is Bloomberg Technology. Coming up, Tesla posts smaller than expected losses for the second quarter, but investors are looking ahead of the curve. The big focus on Model 3 production and whether the car for the masses cuts into sales of Tesla's luxury cars. Plus, Hyperloop One unleashes its potential after completing its fastest and most successful test yet. I spoke to the company's co-founders about what they learned and asked when passengers will be able to take a ride. And Square continues its banner year with a better-than-expected second quarter. We will break down its latest earnings report ahead of my exclusive interview later with CEO Jack Dorsey. First to our lead. Tesla shares are swinging in late trading after reporting second quarter earnings. The electric car maker lost $1.33 a share, far less than the $1.88 analysts had expected. Revenue reported was also better than expected at $2.8 billion. The big question now is how much cash CEO Elon Musk's company burned through right before unveiling its most affordable car yet. Musk spent heavily leading up to last week's rollout of the Model 3, a sedan that starts at $35,000 and has racked up more than 500,000 reservations. Joining me now here in the studio, Bloomberg Tech's Dana Hull, who covers all things Tesla and broke the earnings for us. So shares now up more than 5.5%. What are the highlights?
It was a beat across the board. I mean, they spent less. I mean, they said they were going to spend a lot, but they spent less than investors had feared. Model 3 reservations are through the roof. They've started installing the solar roof. And it sounds like these fears of cannibalization are not as severe as some had been concerned about. The shareholder letter says that they've actually seen an increase in reservations for both the S and the X since the 3 was revealed.
Let's talk a little bit about the cash burn. I'm looking at our top live blog happening right now on the Bloomberg. Tesla spending $1.16 billion in the second quarter.
Right, and they had signaled that they would spend heavily to bring the Model 3 to market. So they still have $3 billion in cash on hand, which should get them through the end of the year without having to do any kind of raise.
So let's talk a little bit about production. And he did say over the weekend when they unveiled the Model 3 that he would be going into production hell, that they all would be going into production hell. Take a listen to what he had to say.
Frankly, we're going to be in production hell. Welcome. Welcome to production hell, where we are for at least 6 months, maybe longer. But you guys know that you're veterans. I've been through this. So I look forward to working alongside you to journey through hell. And as the saying goes, if you're going through hell, keep going.
Most of the people in that crowd were employees.
Yes.
A lot of laughter there. But what does the trip through hell mean for investors?
Well, I mean, I think the trip through hell is on everyone's mind. What does he mean? Is there some kind of supplier issue or production snafu? But there was nothing about that in the earnings report today. I think we'll probably hear a lot of questions about that on the analyst call.
So he's saying they can get to 5,000 Model 3s a week.
By the end of this year.
By the end of this year.
Yes. Is
that possible?
Well, that remains to be seen. I mean, the cars that were handed over to employees Friday night were largely hand-built. And so now they're really going to begin the true beginning of sort of mass production. 5,000 a week from like 30 or 50 is pretty steep. And so everyone is wondering, what does that ramp look like? Are there any potential roadblocks? When he says hell, what exactly does he mean? But they're sticking to this a very aggressive timeline, 500,000 cars in 2018, 1 million cars by 2020.
Let's talk about inventory. Are we seeing any signs that demand for the Model S or the Model X is softening?
Well, that was the big fear when they released the sales figures earlier this month. I mean, it was there was a quarter-over-quarter drop, and you see a little bit of a rise in inventory on the balance sheet. What they've said is that they want to get more Model S and X's out to their stores because some stores were operating without any fleet models, and they need to have extra cars around for test drives. So I think that's another really interesting question for the call today. Is this rise in inventory something to be concerned about, or are you just sort of making sure that all of your showrooms have the latest and greatest?
Ambitious as ever. What about the upcoming semi-truck, the Model Y?
Well,
any new details?
Okay, so there's a semi-truck, and then there's the Model Y, which is a crossover. The shareholder letter ended on, like, we're looking forward to adding the semi-truck to our fleet. So that'll be the next catalyst for the stock. They're supposed to unveil this semi-truck in late September.
And what about solar panels, the solar roofs, as well as Gigafactory? What are we learning there?
So they have started to install the solar roofs on the homes of some employees in order to fully test them before they roll them out. It's interesting to figure out, like, what is Solar City at this point? I mean, is that brand just going away? Are they completely shifting to roofs? And then there was a little bit of a mention of this project in Australia, which is a big energy storage project for South Australia.
So when it comes to the more than 500,000 deposits that they've got, people who want the Model 3, what's the likelihood that all those orders come through, that all of those orders are completed?
I think it depends on how long you're willing to wait and whether you will qualify for the federal tax credit or not. You know, right now you get up to a $7,500 federal tax credit on an electric car, but that begins to ratchet down once Tesla hits a certain volume. So the big question is, you know, where are you in line? How important is that tax credit to your pocketbook as you make this purchasing decision? And, you know, if you live in a part of the country where you're not going to get the car for another year, can you wait that long?
All right, well, I know you're about to jump on the analyst call. We'll be listening in. We'll be watching for your headlines. Dana Hull, who covers Tesla for us. Thanks so much. Well, now to some other stocks we are watching. SunPower had its worst day in almost a year, tumbling 20%. The U.S. solar panel supplier lowered its sales forecast for 2017. 2 solar farms in Mexico are facing delays that may push sales from those projects into next year. SunPower said it expects panel shipments to total 1.3 to 1.45 gigawatts, down from as much as 1.6 because of those delays in Mexico. And on another topic, Wonder Woman delivered big profits for Time Warner. The company reported second quarter earnings that beat analyst estimates. The Warner Brothers studio has seen box office sales rise thanks to the superhero movie, with domestic receipts up 9.6% this year. Coming up, the Dow hitting 22,000 points thanks to Apple reaching a record high. We will examine tech's effect on this historical run in stocks. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV. Weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. The Dow surpassing the 22,000 mark today caught the attention of President Trump. At the White House, he discussed the 4th round number milestone achieved since he was elected president.
The stock market hit an all-time record high today, over 22,000. We've picked up substantially now more than $4 trillion in net worth in terms of our country, our stocks, our companies. We have a growth rate, a GDP, which has been much higher than, as you know, anybody anticipated, except maybe us. But it's going to go higher too.
This record close also grabbed the attention of our very own Abigail Doolittle. She joins us now from New York and covers stocks for us. And of course, Abigail, when you look at the NASDAQ, which is tech heavy, there was actually a lot of volatility today.
Indeed, Emily. It was pretty amazing, actually, because the NASDAQ opened up by about 0.5%, so a pretty bullish open there, driven by Apple. And then by midday was down about 0.7%. That's a huge swing, a more than 1% swing on the day, and then finished fractionally lower. The reason this matters, Emily, is because often volatility breeds volatility. So we see this sort of intraday volatility. It typically moves toward closing volatility. And don't forget, we had that tech pullback back in June. This could be an early signal that something similar could be ahead. Now, the NASDAQ may have finished flat, but not surprisingly, fitting to that very volatile action were some big movers on the day, including Illumina and Apple to the upside. Illumina, after their new gene sequencing product, they delivered more of them than expected. Apple, of course, and that very strong June quarter report, plus the outlook for the September quarter, the current quarter on the revenue side, much better than expected. To the downside, though, Mylan down after Wells Fargo warned around the generic space, and then Viacom also lower. Apparently, Time Warner had a somewhat cautious forecast, so that weighed on those shares today, Emily. So again, the NASDAQ finishing right about flat, but a lot happening beneath the surface.
Apple wowing with a high today. Of course, we spoke with Apple CEO Tim Cook yesterday. He was very optimistic. What impact did this have on all the other FANG stocks?
That's a great question, Emily, and the answer is probably not so much. You know, that Apple quarter was really pretty tremendous, especially in terms of the outlook, allaying fears around the iPhone X and whether or not there's a shortage or you won't be able to get them, or that there's going to be some sort of disappointment. The revenue numbers pretty much suggested that everything is going just fine, maybe even better than what some had expected. So you would think that that would maybe give a boost to some of the FANG stocks, Facebook, Amazon, Alphabet, and Netflix. Instead, those stocks finished basically flat, some volatility there on the day, really not on a lot of news. From a fund of flow standpoint, some of the money going into Apple could have come from some of those other big tech names. Interestingly now, though, Apple is now better than Amazon. If we hop into the Bloomberg terminal and take a look at #BTV 6742 in bottom, this is a year-to-date chart. In bottom, the S&P 500 up 10%. Up top in yellow and white, we have Facebook and Netflix, both up more than 45%. In green, look at Apple overtaking Amazon in blue. So that is one thing that happened on the day. And Apple is now trying to take out perhaps Netflix and Facebook. Time will tell, Emily.
Interesting to see the recovery of Netflix there. Okay, Abigail Doolittle, thanks so much for that update. Staying with FANG stocks, what's in store for the tech industry as this quarter's earnings season winds down? Joining us now, Mark Mahaney, lead internet analyst with RBC Capital Markets. Great to have you back here on the show, Mark. So you don't cover Apple, but you cover all the rest. What's your take? What do you think the big highlights from earnings seasons are? Obviously, we saw a strong quarter from basically all of these companies.
I think two takeaways. One, the demand trends remain extremely consistent. So I think this was our 30th quarter in a row of 20% year-over-year revenue growth for Google, our 17th quarter in a row of about 50% year-over-year ad revenue for Facebook, and then about 20% year-over-year growth for almost 10 years now for Amazon. So we've seen very consistent demand trends. That's point one. Point two is the investments are heavy, and they were heavy last year and the year before that. And they're probably going to be heavy the next year, too. These companies clearly want to maintain these growth rates, and they think they've got a lot of new opportunities to go after, whether it's Amazon now talking about advertising revenue or Netflix spending a lot more money to build out its international content library. These companies all remain in growth and investment mode. There's no scenario under which margins are going to materially expand here.
Let's talk about advertising revenue. Facebook and Google still dominate the pie. I mean, is there any room for other players at this point?
Like a Snap or a Twitter?
Yeah. Big sigh.
Yeah, it's a big sigh. It's unknown. Now, whether they can get to a couple of billion in revenue, 2 billion, 3 billion, yeah, probably. And we call that the experimental budget zone. You know, like you can get a couple of $1 billion from advertisers because they all want a little bit of diversification from Google and from Facebook. But in order to get much more than that, call it 5 billion. There's nobody out there really getting 5 billion of ad revenue. You've got to really prove your ROI. You've got to come up with innovative ad formats. We think of the two, Snap has the better chance of getting there, but it's also starting from a smaller base. But we think that's the better chance of getting there.
Snap's been struggling. Facebook's been taking on some of Snap's most popular ideas. Are you worried about Snap?
Yeah, absolutely. If Snap, we have a buy call on Snap, and we initiated at $24 about 2 months ago or 3 months ago. So we clearly don't know the stock yet. We'll see what happens. And
you're holding that.
Yep, sticking with it. There's two things that this company needs to do. First is they need to reaccelerate the DAU growth, daily average user growth. It's the same thing with Twitter. If the users decline, the stock will decline. Now, Snap needs to get that growth rate reaccelerating, and then they've rolled out a self-service advertising solution, so they need to do that to get more advertisers on the network and cause their ad revenue growth to stabilize. Look, it's still growing triple digits. There's no triple-digit ad revenue grower out there. It's Snap, and we think the valuation doesn't reflect that.
But do you think they can do that when it comes to user growth, especially given the complete lack thereof of international user growth?
I think so, for two reasons. One is that they are fixing their Android problem. They were blindsided, like Facebook was like 4 or 5 years ago with this mobile thing. Back then, that was new.
The mobile thing.
Yeah, the mobile thing. The Android thing is what blindsided Snap this time, and Snap needs to make sure that its app is fully integrated well on all Android devices. That's a couple of quarters fix. The second thing they need to do to get those DAUs growing again or continue to grow and maybe at a faster level is just to keep rolling out better and better features. I think Snap Maps falls into that. I thought that was kind of a pretty cool feature that they've got. They got to do more of that, and if they do, I think DAUs grow. If they don't innovate, the DAUs will flatline, the stock will flatline at best.
Amazon forecasting a potential quarterly loss for the first time in a while, obviously being very aggressive about moving into new markets like groceries. Are you concerned?
No, not really. Look, come on, 20 years of growth, investments, losses, gains. I think they've kind of proven
big bets.
Yes, and successful big bets. The biggest single trend probably across technology right now is cloud computing, and that was Amazon's big bet. They've had a series of other good bets like the third-party marketplace. I think the Kindle family of devices has been pretty good. I think these Echo devices, I think they've got a home run on their hands there. So, yeah, I'm willing to allow them to invest. And by the way, groceries is a very large TAM. It's a logistics business. Amazon is logistics. So, yeah, I mean, a little bit of concern. But, you know, over time, they've built up trust, at least for me.
Amazon seeing more success with its own original content. Netflix, of course, spending billions of dollars on original content. Now you have competitors like Hulu with a hit now, The Handmaid's Tale. Do you think Netflix's burn is sustainable? Is this paying off?
I'm not going to sigh so much on Netflix. And the reason is we've run surveys now 2 years in a row, and we find that amongst Amazon customers, regular Amazon customers, non-Prime, 50% of them are Netflix subs. Amongst Prime Amazon customers, those who get the free, quote-unquote, free video, 70% of them, and a growing percentage are Netflix subs. I think what's really happening here is the death of the big bundle, and people, consumers, especially the most, you know, quote-unquote, more advanced internet users, don't go into Prime, and they're going to Netflix. And I think you've got this huge secular tailwind, the shift over to streaming, and I think Netflix is the biggest beneficiary of that. And you know why? Or they've got great content, that's one. But the data, the proof of that point is the fact they're going to add more subs this year than they did last year. In the U.S., their most mature market, they're adding more subs this year than last year. We're not at the end of the S-curve for Netflix.
All right, Mark Mahaney.
Okay.
RBC Capital Markets, as always, great to have you. Very sure of yourself. I like the confidence. Thank you. Coming up, the wearables market is still weak, but Fitbit shares are soaring after reporting second quarter results. We'll dig into why. This is Bloomberg. Now to Symantec, trading up after hours after reporting first quarter results, forecasting both sales and profits that beat analyst estimates. The world's biggest maker of cybersecurity software projected adjusted earnings of 40 cents to 44 cents and sales of $1.26 billion to $1.29 billion for the current fiscal quarter. However, Symantec is also paying the price for a rapid turnover in the C-suite, having gone through 4 CEOs in the last 5 years. As a result, Symantec has spent at least $127 million on exit packages for departing managers and replacement awards for new ones. Well, outside of Tesla, 2 other companies reporting earnings after the bell. Fitbit shares surging in late trading after the company posted second quarter results that beat analyst expectations. The company said it sold 3.4 million devices in the quarter. Also out with earnings, Square. Its quarterly results topped analyst projections thanks to larger merchants joining its platform and increasing sales of its business services. Joining us now from New York, Bloomberg Tech, Selena Wang. Selena, I want to start with Fitbit. What are the highlights as you see? It all comes down to the smartwatch market, doesn't it?
We saw shares soaring today, but that's not totally good news. Really what investors are saying is things weren't quite as bad as we thought, but there were still losses. They just didn't lose quite as much money as expected, and revenue still declined a whopping 40% from a year before. And this quarter really, is really just a quarter as they're transitioning and getting ahead into what investors are really watching out for, which is, as you mentioned earlier, the debut of its smartwatch. So much is riding on this, and analysts will be watching it very closely to see if it lives up to its competition.
A lot of questions in terms of just how big the smartwatch market actually is and whether Apple is simply going to run away with it.
Well, Fitbit really has no choice. The fitness band market has clearly been shrinking and declining. Fitbit went from being first place for many, many years in the wearables market to third place, being beat out by Apple. So it's true, there's significant competition here. We reported before that they had delays and issues in ramping up the technology for this smartwatch, but they don't have a choice. Analysts are saying that investors can't wait for this smartwatch to get there soon enough. They need a new product. They need to enter a new category. There's no choice here.
So what are the new products in the pipeline?
The new products are upgrades of the existing product, and James Park, the CEO, reiterated that the smartwatch that should be coming before the holiday season, which this timing is very important. Sources had told us that this had originally been planned to be rolled out in the spring, and now that's been all the way pushed back to the fall. Analysts are hoping that it's going to have all the full feature sets, including heart rate, GPS, an app store, connection with music, and the price point we've heard is under $300.
All right, let's talk about Square. Shares had hit a record high last week. What do the results look like?
We saw shares spike right after earnings came out. They've paired slightly. They beat already extremely high expectations. They beat on the top line, on the bottom line. We saw gross payments volume increase as well. I think the big story here, though, is that Square is not just a niche payments processor for the food truck stand or the one-person hairdresser. This is for actually medium-sized businesses as well. The larger sellers continue to contribute to their platform. They added more larger sellers as well. And these larger sellers also have more money to buy into their whole suite of software services, ranging from loans to food delivery, instant deposits, and employee management services.
So quickly, Selena, where does it look like most of the growth is coming from?
Most of the growth is still coming from the newer ancillary businesses as well as the core businesses. Now, Square Capital and instant deposits and the food delivery are three areas that they saw the greatest growth, and that's contributing the most to the newer lines because large businesses really see value in having this end-to-end solution, and they don't have to stitch together a bunch of services from other providers.
All right, Bloomberg Tech, Selena Wang, thanks so much for joining us. Be sure to tune into Bloomberg Daybreak Asia tonight, 8:30 p.m. New York time, to watch my exclusive interview with Square CEO Jack Dorsey. That will be running throughout the day. Coming up, Hyperloop One gets a step closer to its futuristic transportation reality. We'll talk to the co-founders about this historic test. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of your first word news. President Trump today publicly endorsed legislation sponsored by Senators Tom Cotton and David Perdue that would reduce legal immigration to the U.S. and evaluate visa applications.
Crucially, the green card reforms in the RAISE Act will give American workers a pay raise by reducing unskilled immigration. This legislation will not only restore our competitive edge in the 21st century, but it will restore the sacred bonds of trust between America and its citizens.
Russian Prime Minister Dmitry Medvedev says the sanctions bill signed by President Trump is a declaration of what he called an all-out trade war against Russia. Medvedev adds the Trump administration demonstrated, again quoting, total impotence by surrendering its executive authority to Congress. Fighting broke out on the floor of Brazil's Congress today during a debate and vote to decide whether to suspend President Michel Temer on charges of bribery. President Temer would be suspended and tried if 2/3 of the 513 members vote against him. More than 7,000 Syrian refugees were driven from Lebanon to Syria today, part of an agreement between Syria's al-Qaeda branch and Lebanon's Hezbollah group. The prisoner swap included a top al-Qaeda operative and was the last part of the deal. Hezbollah combatants have been fighting alongside Syrian President Bashar al-Assad's forces since 2013. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. Wednesday here in New York, 7:30 Thursday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, that positive lead from the US is expected to translate into gains here in the Asia Pacific as well. We're seeing some strength on Nikkei futures, where it is beer day. Earnings from Asahi and Kirin will be announced. Sumitomo reporting as well. Here on the ASX, we're seeing futures up by 0.2%. We'll be watching Rio Tinto shares, the miners' shares slumping in London despite underlying profits surging to $3.94 billion. That was, however, a miss. The market was expecting better on a resurgent iron ore price. Rio Tinto also announcing a $1 billion share buyback and $2 billion interim dividend. We'll also be watching the Australian dollar today with trade data for June due out. That is expected to shrink a little to a $1.8 billion surplus. Elsewhere, we've got balance of payments out of Korea and earnings from Cheung Kong Property and CK Hutchison in Hong Kong. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
Bloomberg Technology, I'm Emily Chang. Now back to our top story. Tesla shares gaining in late U.S. trading. The company burning through cash less than analysts expected. The burn rate was still a quarterly record, though, and almost doubled the amount of money Tesla went through in the first 3 months of the year. The conference call has just started. We will bring you all the latest headlines. We are listening in. Joining us now from Princeton, New Jersey to break down the results, Bloomberg Intelligence's Kevin Tynan, who covers Tesla for us. So, Kevin, all eyes on Model 3 and how production difficulties or challenges will impact the results. What do you think the highlights are?
Yeah, and I think obviously the cash burn is probably at the top of the list. I'm not sure there's a lot of numbers in there. Just from the perspective of being the second quarter, haven't really gotten to Model 3 production ramp. Solar Roof really contributing revenue just yet. So this is a quarter that the smaller than expected loss is a good thing. Smaller than expected cash burn is a good thing. But there's certainly a lot of heavy lifting left to do until Model 3 gets to where it's generating cash flow for the company.
Talk about the heavy lifting. Elon Musk has talked about going through production hell in order to make this happen. What do you think that means for investors?
Yeah, and if you think about it, in the full year 2016, this is a company that produced in low 80,000 units globally and distributed or delivered 76,000. So you're talking about, if you just look at the backlog order for Model 3, going from basically a niche or boutique automaker to being approaching a volume manufacturer, and the run from 70,000 or 80,000 units in 2016 to 500,000 by the end of next year is going to be a multiple more difficult than it was to go from 0 to 70,000, and expensive.
We spoke a bit earlier with Dana Hull about concerns around cannibalization. I mean, what is your outlook on how interest in the Model 3 will impact interest in the Model S and the Model X?
Yeah, and I would believe that there would be significant cannibalization. And the reason I say that is because, as we've seen, the first models to come out are the long range, 300 miles, I guess, is long range in an EV. Long-range EV, $44,000, and it's only the rear-wheel drive version. So my thinking is that once you start to option it up with the dual motors and the basically all-wheel drive, autopilot, and several options, you're well into the $50,000 range. So the thinking is that you're probably not going to see a whole lot of $35,000 Model 3s. Closing the gap on cost once you option up a 3, it closes the gap on the S, which I think has to cannibalize some of the sales of the S.
All right, Kevin Tynan, our Bloomberg Intelligence analyst. We are listening in to that Tesla earnings call. We'll bring you any headlines as we have them. Well, Hyperloop One, the futuristic high-speed transportation company, just completed its second phase of testing. In the Nevada desert, a prototype accelerated down the length of its 500-meter-long track, reaching 192 miles an hour. The pod glides above the track using magnetic levitation in a nearly airless tube, which limits aerodynamic drag and theoretically allows for a top speed of 760 miles an hour. Earlier today, I spoke with co-founders Shervin Pishevar and Josh Giegel about what this means.
We're now 300 people strong. The last 2.5 years from starting the company has been about proving the technology works. Now we've shown at Hyperloop One that the Hyperloop is real. It works, and now we move into what we call the dawn of the commercialization of Hyperloop. So as all the travels that we've been doing and the conversations and dialogue and studies with governments around the world, we've shown in the videos that you saw the actual full-scale Hyperloop working with the pod XP1, traveling at incredible speeds, faster and faster. And now we move on to the commercialization process of actually building this out around the world.
So, Shervin, I have the ticket you gave me to ride the Hyperloop. When will I be able to use this?
Sooner than you think, but keep that ticket. That's a very special ticket, Emily. and you're guaranteed to have a ride on the Hyperloop with Hyperloop One. That's a promise from both me and Josh.
Yes.
All right. So, Josh, what is the timeline? When will you have it up and running for cargo and for passengers?
So the next phase for us is to actually move this into production space. So we have to make sure it can be reliable for 30 plus years and actually get it into a mass manufacturing market. So that's what's next for us on the engineering side, and we think we'll be able to do that by the 2021 timeframe.
Shervin, how do you overcome cost barriers and safety concerns?
It's a great question. We basically, the way that we have architected the Hyperloop is to make it the cheapest, fastest, safest, cleanest form of public transportation in the world. The way that we've designed it, the reason it can be cheaper is that the stators or the motors that we've designed only have to be on the line for every 30 kilometers, whereas other solutions have continuous maglevs and motors that are way more expensive to operate, maintain, and build out. So what you'll see is a future that's very similar to what we've seen with Paris and Brussels being connected with high-speed rail, where there aren't even any flights anymore between those two cities. Everyone is taking the high-speed rail route. What's interesting about Hyperloop One is that our solution essentially will be an IP solution and a control system automation solution. So we really want to engender thousands of companies around the world that are building these Hyperloops around the world using our technology.
Now, Elon Musk, of course, is the one who came up with the original white paper on Hyperloop technologies, and he's always said he doesn't want to commercialize the technologies, but now he has the Boring Company, and he recently tweeted, "Just received verbal government approval for the Boring Company to build an underground New York, Philadelphia, Baltimore, D.C. Hyperloop, New York to D.C. in 29 minutes. What do you make of his sudden apparent push into Hyperloop with the Boring Company?
So Hyperloop One is very focused on getting the actual Hyperloop, the real Hyperloop, out to the world. The world is a very big place. Infrastructure is very difficult to move forward. You need the collaboration of governments around the world. We've been in deep discussions with governments for a long time, and we can build it overground, underground. Tunneling is just one of those solutions. It's also a very expensive solution to just do tunneling. So we want to have a multimodal solution and spread that around the world.
So we're hearing from sources that Musk may actually want to build all the components. What would it be like to go up against him?
We are very, as you've seen, being able to do this in 2.5 years, have 300 brilliant minds. We are very focused on execution, and there's probably many, many partnerships in that space to be pursued.
So there has been some turnover, particularly on the tech and engineering side. How are you handling that?
You know, we've certainly had no shortage of people interested in working for us. You know, I brought in a new SVP of hardware engineering who came from the Google X program and a few other things, as well as a new software lead starting in about a week and a half from now. So there's candidates knocking down the door.
The CTO did move on, and there was a lawsuit, and I'm curious, Shervin, what you learned from that experience and how you're moving forward.
Yeah, we're incredibly focused, as Josh said, on building the real Hyperloop, building it around the world, as we've shown with the major milestone of the XP1 pod traveling at those speeds, breaking these speed records. You know, we are very focused on the future, and that's all we care about.
Talking about the future, Shervin, I got to ask you. You are one of the earliest investors in Uber. What are your thoughts on Travis Kalanick's resignation, and who do you think is the right person to lead the company forward?
I think Uber is one of the great companies of our generation. The impact that it's had on the world, the scale at which it's reached. Every company has lessons that it learns in that kind of historic run. It's it is the fastest growing company in history, and at those speeds you're going to reach some friction, and they've taken that very seriously. And I think it's one of the greatest opportunities for a incredible leader and CEO to come in and help lead a company that's at the forefront of where transportation solutions are going.
Hyperloop One co-founder Shervin Pishevar and Josh Giegel there. On to yet another turn in the Uber-Waymo courtroom battle. The ride-hailing giant has asked a judge to order Alphabet CEO Larry Page to submit another 2 hours of questioning in Waymo's trade secrets lawsuit. Uber claims the executive was ill-prepared for his deposition and that his lawyers obstructed the process. You'll remember that Alphabet's autonomous car unit Waymo sued Uber earlier this year, claiming that its former engineer Anthony Lewandowski stole trade secrets and patents. Waymo had no immediate comment on the filing. Coming up, we speak with Airbnb's global head of trust and risk management on what the platform is doing to garner public trust. This is Bloomberg. Facebook out with some new numbers on Instagram. The company says its young users spend an average of more than 32 minutes a day on the app. For those users 25 and older, usage is more than 24 minutes a day. Instagram is crediting much of the growth in engagement to its Stories feature, which was launched a year ago as an answer to Snapchat's similar feature with the same name. Instagram's version now has 250 million daily users. Meantime, Airbnb is taking big steps in building trust between hosts and guests. The peer-to-peer vacation rental and hospitality site plans on doubling down on 3 key areas: safety, connection, and support. This comes as Airbnb continues to combat complaints on its screening process for hosts and guests and faces numerous attacks from hotel lobbying groups. Joining me now to discuss, Airbnb Global Head of Trust and Risk Management, Nick Shapiro. Nick, thanks so much for joining us.
Sure, thanks
so
so much.
You posted about earning trust in a time of an unprecedented crisis in trust, in business, in government, in the media. What are you doing to increase trust in Airbnb?
It's a great question. Thanks so much. Like you said, there is this crisis of distrust right now. People are trusting less in these main institutions, but they're trusting in each other more. And Airbnb was designed specifically to build that trust. We went back and we looked through how we can leverage that new phenomenon, and that's when we started to come up with, it's really about a hierarchy of needs, and we need to continue to facilitate and build that trust.
So what does that mean? Because I know you're actually using technology to facilitate it.
Yeah, absolutely. So first and foremost, we realized that people need to know that they're going to be safe. They have to feel safe. So we do a number of things to use that technology to do that. Like we risk assess each and every reservation. We run global watch list checks against all of our users worldwide. We background check hosts and guests in the US. But just being safe isn't enough. We use this technology to also build connections. There are detailed profiles. There's the messaging system where you can learn more about each other. And there's reviews so you can look at previous history. And on top of that, we know that people need to know they're not alone. Airbnb is there for them. So if they get to a listing and it's not as what they wanted, it's not as advertised, they've got someone to reach out to.
You have a national security background. You were Deputy Chief of Staff for the CIA during the Obama administration. I'm curious how that experience informs what you're bringing to Airbnb and how you might complement something that Brian Chesky might think.
Yeah, no, it's a great question. Airbnb, the tech sector, sharing economy, is filled with some of the most optimistic people in the world.
Exactly.
Brilliant and also very optimistic. I come from a background and bring a very different light to that. I am way more cynical, and it's because of some of the previous experiences that I've had. But I think a healthy dose of cynicism matched with the right optimism and brilliance that most of our engineers and product managers bring to the table is a really good partnership.
The hotel lobbying groups are upping their attacks on Airbnb. There's one recent ad connecting the platform with terrorists. How do you respond to that?
It's disgraceful, it's disrespectful, and it's despicable. I know people who have lost their lives. People have fought very hard for this country, and to have an issue like that politicized to make a business point or to continue to price gouge their consumers is very hurtful. Safety is the #1 priority at Airbnb. Trust is a fundamental currency in the sharing economy, and it's the thing we focus on the most. So we do a number of things like background checks, like global watch list checks. The hotels don't even do any of that.
Talk to me about these background checks. There was a recent report of a woman who was a guest saying she was sexually assaulted by a host, and she claims that a background check would have revealed that this host had been arrested in the past for battery. He denies the allegations. You know, how are you handling this case? And what do you actually tell guests about their hosts and vice versa if something is flagged?
It's a good question. First, let me say the behavior this woman encountered allegedly is abhorrent. And that's why as soon as she told us this, we removed this host from our community, first and foremost, and we offered her our full support. A background check was done on the host in question, and there were no prior convictions. You know, when you do a background check and there are recent charges, previous charges, but no convictions, it's hard to hold someone accountable when they were acquitted of an offense.
Is it making you think any differently about the process?
You know, I think every incident should make you think. One incident is one too many for us. Safety is our #1 priority, so we're always going back and looking and saying, could we have done something different? Should we have done something differently? And we're going to do that, you know, every time something happens.
Lastly, you are getting now into these magical trips and connecting, you know, actual people who are going to take you around for a more, you know, well-rounded experience. This is increasing the amount of time that guests will spend with these people. You know, what does that mean when it comes to trust and safety?
You know, I think what it means is we need to work extra hard to peel back the curtain and let folks know what we do to help build this trust, what we do to keep them safe. We want people to make informed decisions. We want them to know when they're signing up for an adventurous experience or to travel. We can't eliminate all of the risk, but what we can do is tell them exactly what we do and make sure that they make the best decision for themselves.
All right, Nick Shapiro, Global Head of Trust and Risk Management at Airbnb. Thanks so much for stopping by.
Thanks so much, Emily. Appreciate it.
All right, coming up, the Samsung bribery case. The billionaire vice chairman at the center of this case takes the stand for the very first time. Jay Lee will talk about it. This is Bloomberg. Tesla CEO Elon Musk on the earnings call right now, telling investors that demand for both the Model S and X vehicles increased after the release of the more affordable Model 3. We're going to continue to monitor the call. We'll bring you the very latest as we get them. He's just said that Tesla is getting 1,800 orders a day for the Model 3, even though he says, quote, we don't promote it. Now to another story we are following, the Samsung bribery case. Jay Lee, the billionaire heir to South Korea's largest company, took the stand today for the very first time. Lee denied the allegations that he bribed a friend of South Korea's former president to secure her support for a key merger in 2014. Joining me now, Bloomberg's managing editor for Asia Tech, Peter Elstrom. So what did he say?
Well, this has been a long-awaited appearance. J.Y. Lee has been in detention since February. He finally took the stand, and he denied that these gifts that Samsung made to the friend of President Park had anything to do with his merger and contention. Samsung does say that they gave a variety of gifts to this friend to promote equestrian sports in the country, including a horse that was worth about $800,000. Not
That's
too
quite
bad.
a gift.
But they say that promoters around the government frequently come to them for contributions like they do to other major companies in Korea. So they deny that there was any connection between
So how big a distraction has this been? And where do they go from?
It's a big distraction in Korea. I mean, they have this trial playing. There's regular coverage of it, daily coverage of it. This moment was very much waited for, but the trial has to end now. There's a period of time that has to end next week. The trial will be completed, and the judge needs to make a decision about this.
So next steps then?
Well, it's important to point out that Samsung Electronics, the business, has been doing very, very well. Their chips business is very strong. Their smartphone business has actually been coming back quite a bit. But what remains to be seen is what's going to happen to J.Y. Lee.
Exactly. This is the heir apparent. I mean, what is the likelihood he will still ascend in the way that's been expected?
Well, there's little question that over some period of time he will ascend into this role. The question is whether he's going to be able to do it in the short term, if he's not convicted here, or whether it's going to take a bit more time.
A bit more time means years?
Well,
how long?
If there was some convention, I would say that there has been criticism of the prosecutors that they have not been able to produce any sort of smoking gun that's connected J.Y. Lee to these actual contributions. So there's been a lot of circumstantial evidence, but the question is whether the jury is going to, whether the court is going to determine whether this is going to go forward.
All right. Fascinating. Peter Elstrom, our Bloomberg Tech editor, thanks so much.
Thank you.
It's been great to have you this week. Every day I think we've had you on. That does it for this edition of Bloomberg Technology. Be sure to tune in to Bloomberg Daybreak Asia tonight, 8:30 p.m. New York time for my exclusive interview with Square CEO Jack Dorsey. This is Bloomberg.